All right. What a great intro. Great to be here, folks. I'm Rob Tetrault from robtetrault.com, portfolio manager here at Canaccord Genuity Wealth Management and at the Tetrault Wealth Advisor Group. Thanks for joining us today. Really excited about our guest. Bring him in right away here. But before we do that, no, you know what? I want to bring him right away. We just saw the disclaimer. We'll bring in our guest right away. Today, we have none other than Scott Chan. Scott, let me bring you in here right away. There we go. Scott Chan, MBA, CFA, Managing Director, Equity Research, Financial, specifically stocks, the guy who here at Canaccord Genuity focuses his research, his livelihood on studying the financial companies and a couple others that some wouldn't consider financials perhaps at some other firms. But we are thrilled and lucky to have you here, Scott. Welcome to the show.
Thanks, Rob, for having me. Appreciate it.
All right. So bit of a good day in the markets today. I always start the show every day. Maybe before I do that, I should say that if you're watching on YouTube, please take a sec to subscribe. If you like what you're seeing, share it, send it to your friends, tell everyone that you're watching the Tetrault Show. We're always thankful for viewers and for fans out there. We do appreciate all your support. So today in the market, NASDAQ jumps more than 2%. I'm just looking at my big board here up above the TV. The NASDAQ finished up almost, what's my latest number here? 263 points, 10,767, up 2.5%. The S&P 500 up 27 points, closed just over 3250. Dow Jones up 31 points, closed just over 26,703. That NASDAQ, Scott, keeps hitting. This is an all-time high, 10,767, I believe, for a close, or near it for sure, if not. Are you surprised to see these kind of movements midsummer when there's no real kind of big news happening?
Well, I think people are looking to what's working, right? From a technical basis, and technology stocks and software stocks in particular, they've really thrived in COVID. So, looking out, I think investors are really investing in what's working, and that's continuing on into the summer. Rob,
what isn't working, definitely some of the employees over at Southwest, Delta. I know 17,000 Southwest employees today, they signed up for buyouts, leaves of absences. This is a travel, basically no one's traveling. This week, actually, I saw a chart on CNBC that was reporting that travel is down. Airplane travel is down week to week for the first time since COVID kind of started. So we had seen kind of a nice trickle up. We're getting about 800,000 travelers a day, and that's down from the 2.5 million or so generally around this time of year. So travel is about a third, and those airline stocks are just getting hammered really bad, beat up pretty bad. Other headlines that we're seeing, Oxford and AstraZeneca. So they got a COVID vaccine. Not sure if you saw this news, Scott, but it showed a dual immune action. So last week we had the Moderna news. Now AstraZeneca, Pfizer, Merck, they're all kind of working on trying to get some vaccines going. It is a race, and this is the latest in a good news, which I think personally has spurred the market here these last 3 weeks. The thought of a vaccine. Would you agree with that comment, that you think it's moving the market a little bit?
I 100% agree. Headline news on COVID and finding a drug is paramount to the market and is a market moving indicator. I wake up every morning well before the markets open, so I was reading that today too, Rob, before I came into the office. But yeah, it's certainly that is positive, and is always incrementally positive during that day.
Your office, tell me about it. You're in downtown Toronto right now?
I am in downtown Toronto.
Right at the corner of Bay and Front there?
Bay and Front Street. It's a ghost town downtown for the last 4 months. Even right now, I would say in our office, in our floor, it's less than 10% capacity. I've typically been at home, like most people in research, during the pandemic, but I periodically come in to see my associates, and I had a company reporting People's Corp this morning, so it's just easier when you're in the office to work on companies.
People's Corp, a Winnipeg story. I know some of the people over there. Fantastic story. We're going to talk about it in a sec because it is a Winnipeg story. Are the street meat vendors out in Toronto? Can you go down and get a hot dog, or are they not even out?
No, not even out. The only thing that's open downstairs is Subway. And
that's what I had for lunch.
I own a condo on the east side, just across the street on the east side of Yonge. And the only thing that's open, Rob, is Subway. And then now some bars over the past week and a half. But just on patios.
Okay.
Yeah.
The other headline that I saw that I think is a little interesting, it's a BNN Bloomberg report. Patty Lovett-Reed is quoting a study that says Canadian consumer debt fears are easing. And this is a survey. It's an MNP poll published Monday, reveals that various forms of government support has kind of eased the tension on personal consumer debt. I was a little surprised to see that because I thought, given the unemployment numbers that we're seeing, still, 10% of people without a job, that you wouldn't see this positive numbers. But I guess it has turned a little bit.
Yeah, I think it's more of a temporary thing. I think during this pandemic, Rob, a lot of people are just more cost conscious, right? They're not going out. Well, they haven't been able to go out. They're saving more pennies. They're not going on vacation. They're watching more Netflix, and Netflix is $12 a month. So, I think that's more of more on the consumer, just being a lot more cost conscious during the pandemic.
For me, I noticed I cut my cable, but I got Amazon. I got, or what's it called? Amazon Prime Video. I got Netflix. I got Disney, and I got Crave. I got the TSN package. Is that it, or is there another one? That's five, for sure. 5 different kind of $10 a month subscriptions that I got now, ever since I cut my cable. But I digress. I barely watch it, but it's still a good time. Let's get right into financials, Scott, because this is your area of expertise. I'm going to maybe ask you before we get into any specific topic. Overall, what are your thoughts about financials, Canadian financials thus far in 2020?
Yeah, so Canadian financials in 2020 has underperformed from a stock basis. As you know, financials are leaders in the market. So whenever there's a pandemic or a black swan event like this or a recession, financials are going to underperform. If we do get out of this sooner rather than later, which is hopeful, we think financials will relatively outperform. So from a share basis, financials have been one of the worst performing sectors this year, alongside active. And you look at the track record of the big 6 Canadian banks over the past 3 decades, they generally outperform. So buy and hold strategy always works. And my job is to look at these nuances and to a certain extent TD. And I'm just talking about a relative basis relative to its peers. They're more defensive names, and the banks that have been hit the most are the more risky names that we put in a bucket, and that would be like the BMO, the Bank of Nova Scotia, and the CIBC. On the regional bank side, Canadian Western Bank is exposed to Alberta, so they've had issues there, more sentiment issues with the drop in oil prices. And Laurentian Bank has been a troubled bank in Quebec, and they cut their dividend last quarter by 40%, and they're just losing market share. And a lot of these big 6 banks are attacking Quebec and seeing that opportunity that Laurentian Bank has or had in that market.
Trying to snag some market share from Laurentian. Are we seeing the same thing out west with the CWB? Are banks going after kind of the clients of CWB more aggressively?
No, it's quite the opposite. I mean, in Alberta, the biggest company there is ATB. Canadian Western Bank is about half the size. A lot of the banks have pulled out of Alberta. Well, not pulled out of it, but pulled back because of energy. And you can kind of look at the energy loan books from the Canadian banks. If you go back to 15, 16, Rob, during the last mini oil recession, all the banks' energy books were higher than where they are today. And they've got more upstream in terms of going to more production, more investment grade. So they've just been a lot more prudent, and they've actually been taking more business out of Alberta, but it's still a decent piece of, their overall loan book.